A surging IRS penalty is costing taxpayers billions with a B. And especially if you're doing Roth conversions, you got to be careful with this. Big time. All right, so here we go right here. Wall Street Journal, Dateline. What is the date on this thing? I don't even know. What the hell is this? Anyway, today's the 21st or something like that, June. So I don't even know what date this is, but it came out just right there, June 14th from Laura Saunders. Here's a wake-up call for millions of Americans who pay some or all of their income taxes quarterly rather than through paycheck withholding. Penalties on underpayments of these taxes have surged recently. Second quarter amounts are due by June 7th, and taxpayers need to act right away. This group includes many investors, retirees, business owners, and gig workers who aren't employees but are independent contractors in particular, who are self-employed like me. For example, two earners, couples, or staffers with stock options could also owe penalties. And this guy says, a CPA, Richard Pond from San Francisco, these charges can hit hard. So getting it right can save people hundreds or even thousands of dollars a year, 100%. In fact, they say the average estimated tax penalty in fiscal year 2023 climbed to about $500 from $150 in 2022. Look at that. Right here, look at this. Billions of dollars, over $7 billion of assessed for underpayment of estimated taxes in 2023, under $2 billion before that. I mean, that's a 400% increase, dudes. Almost 400%. A key reason is the higher interest rates. So I'm telling you, man, so if you're getting a lot of interest off your cash. I was just talking to a guy today, and normally we plan for Obamacare where you could take Social Security. You can't take Social Security now for Obamacare premium credits. Why? Because he's making too much money, a good amount of money in interest on his bank account. So that's a great problem to have. But I'm like, no, don't take Social Security. It's going to, there's no cliff right now, but it's going to put you over the threshold where you're going to lose some of your subsidies. And his wife is working part-time. I said, no way she should do that. Okay, First Sergeant, good morning. Oh, yeah, a cup of decaf, pineapple, peppermint tea. Getting ready to go watch the hockey game, too. Anyway, so I'm self-employed. So I just got done sending the state $10,000. I've already sent the IRS $40,000. All right, and here we are at the end of the quarter, end of the quarter. But yeah, I still think I'm in the hole a little bit as well, because you got to pay these quarterly taxes. And if you're doing Roth conversions, you can't do a Roth conversion in April and say, I'm going to square up with you again come next April. It doesn't work. I mean, you can do it, but you're going to get penalized. And right now, I think the penalty is 8% of what you underpaid. And so what you got to do is you got to make sure you're keeping up on this. So if you do a Roth conversion, and here's what I always say. If you do a Roth conversion in April, I sent it, depending on what your tax bracket is, always, when you don't want it depends on how old you are. But if you're under the age of 59 and a half, you're doing Roth conversions, you can't have it withheld from your retirement account, from your IRA, because then that'll be subject to a 10% penalty as an early distribution. So you got to pay the taxes from someplace else. And how you do it is actually pretty easy. Let me show you how I do it. I just go to irs.gov, make a payment. That's literally just that simple. And you'll see right now, pay now with direct pay from your bank account. No registration required. Click on this link right here. It'll take you to here, all these languages that we should all just be speaking English because we're in an English-speaking country. Shocking. You hit make a payment, and it'll say, why? And you say, estimated tax. And it'll say, okay, tax for what? Right here. 1040A, 1040 1040 EZ, tax payment right there, period. Then it's going to say tax year for verification. I just do 2023. It'll say your tax filing status. I say married filing jointly. I put my name and social in there, my date of birth, the whole thing, very simple. And then you just go to the next page. And then it'll give you your bank account information, routing number, your account number. And I probably do that once a month. I probably do it 4 times a quarter, 4 times, not a quarter, 4 times a half year, depending on, and it really is based on what you owed last year. So if you're a W-2 employee and you're having money withheld, you still need to, if you're doing a Roth conversion, you still need to pay taxes on the Roth conversion before you do your taxes in April. I'm just telling you right now, you'll be subject to a penalty without question. Now, because I'm not having money withheld, because I'm not a W-2 employee, I'm a 1099. Well, it's not even really a 1099. I'm self-employed. I guess you call it 1099. I give myself a 1099 theoretically. I have to make sure I'm keeping up on my income tax. Because what the IRS says is we don't want you doing Roth conversions in April and not paying us any money until next April. That's not the way it's supposed to be doing. You're supposed to pay your taxes as you get the income, essentially. And rightly or wrong is just what it is. And that's what they say it would be like that if you had a W-2 where you're automatically being withheld. If you're not automatically being withheld, we're going to charge you a penalty for withholding it from us, essentially, because the IRS thinks it's their money. And at the end of the day, it kind of is, isn't it? I mean, they can take it however they want, man. So what you want to do is you want to satisfy the IRS with their taxes. So I always pay. So if you're doing a Roth conversion and you're in a 20% tax bracket and you're doing a $100,000 Roth, man, you better have $20,000 on the side if you're under the age of 59 and a half to pay them their tax. If you're over the age of 59 and a half, I would convert 120,000 and net 100. All right, because we know 20,000 is going to go to the IRS, 100,000 is come to you. All right, if you're going to convert $100,000, you're either going to net 100,000 or gross 100,000. If you gross 100,000, 20,000 goes to the IRS, you're going to net 80. If you gross 120, 20,000 goes to the IRS, you'll net 100. And that's what I would do, 100%. So, okay, give to Caesar what Caesar, give me the rest. But, man, I'm telling you, $8 billion of underpayments. I've had 3 years of underpayments. And this year I'll probably have another, even though the summertime is always pretty slow. So you always worry, like, yeah, maybe I'm overpaying. I don't think I did get some money back last year. But still, at the end of the day, I think they gave me, actually, I don't even know why I got money back, to be perfectly honest with you. I don't know. Maybe they refunded my underpayment. I don't know. But a couple years ago, got a pretty big underpayment. I wasn't expect because I had forgotten I did Roth conversions, and it freaking bit me in the butt. And I had, I think I had like a $1,500 underpayment penalty, something like that. I can't remember what it was. It was like, dude, you gotta be kidding me! I just forgot. I forgot I did a Roth conversion, and because I'm under the age of 59 and I do Roth conversions, it can't. I mean, it can come out of my IRA, but again, that's a premature distribution. Paying taxes is a premature distribution, and thus is subject to a 10% penalty. So you need to have money on the side to pay that tax, man. And so when I do a Roth conversion, I say, okay, $50,000 Roth conversion. I know 20% effective tax rate. Essentially, I'm just using that for example. 10,000, I got to stroke a check for 10,000, doing the way I just showed you. All right. So if you're doing Roth conversions and you got big money in savings account, $300,000, $400,000, $500,000 that you're not paying tax on until the end of the year, you might want to do the how I just showed you. Just pay again. I would pay 10 to 20% of whatever my income is automatically to the IRS to get them A, off your back, and B, avoid any penalty. All right. Love to hear your thoughts. Hope this helps. God bless.